probably a good thing. Good morning, guys. So we are sitting in Ada, Oklahoma, getting unloaded and reloaded. The nice thing about this place is they're basically just unloading empty racks and loading loaded ones on, and then we take it to Kansas City and the reverse happens. So it's kind of a nice little run. But anyway, I wanted to do a video real fast on the stock market this week and what is going on, because I want to always be transparent. I want to show you the good, bad, and the ugly, because I don't want anybody to freak out over it. Okay, so we were at like $3,500 in the investment account this last week. We had a $500 week, you know, as you saw in the videos, and this week it's dropped down to like $3,200 balance equivalent because of the investments went down. Obviously, if the stock price value goes down and all your money is tied up in stock, it's going to show your total overall worth going down. So it's showing, if anything, a $300 loss from last week. So, you know, a lot of people would look at that and go, oh my God, this is stupid. I just lost all the money that I gained, or half of the money that I gained, and didn't make anything this week. I look at the opposite way. What is actually happening with the market now is there are a lot of scares across the board when it comes to the threats of tariffs on different countries and everything else. That's what is scaring the overall market. If you guys will notice, here's one thing I do, okay? If I see a stock of mine that has declined greatly, I immediately go to the Dow Jones Industrial Average and I'll take a peek and see if it follows the same pattern that my stock just did. And what that tells you is the overall market is tanking for that day. It's not your individual stock or company has a problem. Now, if the overall market on the NASDAQ and Dow Jones is all going through the roof and yours is all of a sudden tanking, my next go-to is, okay, let's check the news reports on this company and see if a recent news report came out about, you know, a financial loss or lawsuit or something that I did not see before, which may flag me to go ahead and dump my stock and sell out at a loss, because, you know, rather than lose half of my investment on that stock. But with the market, it does fluctuate. And this is a good thing for us, because if you have your head on straight, this positions you for great gains. You didn't really lose $200, $300 or whatever it just went down that week. As long as you hold on to that stock, 2 or 3 weeks down the road, it's going to be worth a high percentage more than it is now. It's going to not only go up to likely where you bought in at, but it's also going to climb and give you a profit. So, and if, honestly, here's what I do. When the stock's down, this is the perfect time to snatch up a good deal, because value investing is all about buying undervalued companies. If the stock is, you know, a third of its normal price, you're buying it. If you buy into it, buy more stock right now instead of getting scared off by the market being down, this is the perfect time to buy more stock, because you're getting a 30% discount on a company that, even at the static price, 30% more, was going to be expected to climb, you know, an additional 10 or 20% or whatever it was. I've been averaging 8%. So if I buy it 30% less with it being down, and then expect an 8% gain on top of that, guess what? I am going to make 38% on my money for dealing with a couple of down weeks. If I buy additional stock and don't freak out in the process. This is how I think in the market is, you know, don't let it scare you. This is the perfect time to buy when things are down. You know, as long as it's the market or a scare or something like that, and it's not actually the company having issues, then you need to double up, because, you know, I'll talk about it sometime, dollar cost averaging, but, you know, the more you buy into a stock, if you bought, you know, 50 shares of stock or whatever, you know, at $10 a share, and it goes down to $5 a share, and then you buy an additional 50 shares of that stock at half the price, your average cost on that stock is only going to be, you know, $6.50 or $7 or whatever, $7.50, the difference between the two. So you're actually getting a better rate on that stock for when it does go up. So it's the perfect time to buy. I mean, look at the Great Depression. I've said this before, but look at the Great Depression. The ones that made the most money during that time in stock were the ones that bought up stock like crazy for pennies on the dollar because the market was down. Like, this is what advanced investors are doing, is when there are scares, they're doubling down on their investments because they're like, oh my God, I can get twice as many stock for the same price. And then on top of that, make an additional profit when it does go up. It's like buying sub-wholesale and then selling it at full retail, if you know what I mean. You know, you can make money buying wholesale products and selling it at retail or a slight discount. But what happens when you buy it, you know, at auction? What happens if you buy a product that's way well below the wholesale price or half the wholesale price? And then all of a sudden you charge full retail for it. Now your profits just went through the roof. That's called value investing. And that is the secret here. So this is the perfect time to value invest in the market. That's enough for now. I'm almost loaded, unloaded, and we're going to hit the road. Love you guys, and more very soon.